As an investor, is there a smart way to determine how long I should hold on to a given stock? The answer is yes. It may change as time goes on, but it's smart to try and determine ahead of time if a stock you're considering is just a short-term trade or a long-term hold. You may be familiar with the concept of swing trading versus position trading. We always want to have an idea of roughly how long we plan to hold a stock once we enter a trade. Again, this may change after you get into the trade, but it's smart to have a plan going in. It can be similar to baseball. Sometimes instead of going for home runs with longer-term investments, we're just bunting or hitting singles or doubles with swing trades. However, those hits may turn into triples later on depending on how things go. So which type of trade you decide on comes down to a few key things, one of which is stock analysis. If a stock checks all the boxes with a picture-perfect fundamental profile and compelling chart action, then maybe you can consider holding for a bigger move. But if there are any criteria that miss the mark, then it may not be something you have conviction in. This makes it harder to want to hold it through the pullbacks. Now, when we swing trade, we're ultimately applying the same rules of IBD's investing system in a swing trading environment to help us take advantage of short-term trends. But an important distinction to note is that with position trading, the fundamental analysis gets a heavier weight than technical analysis. However, for swing trading, it's the technical analysis that's most important. Another key factor in deciding on trade type is market environment. Some environments are more conducive for successful swing trades, while others are better for position trading. Choppy environments tend to lend themselves more to swing trading. A volatile uptrend with tons of upside reversals tends to provide investors with prime swing trading setups. Also, when the market is choppy or down, or we're seeing quick rotations from various industry groups, having a short-term mindset can be very beneficial. On the other hand, in a super bullish market where pullbacks are rare and short-lived for a stretch of time, position trades may likely be the best way to go. So whether you're planning for a swing trade or for a position trade, the profit and loss rules that you use to manage the trade will be different. This is why it's so important to have a clear intention of the type of trade you want to make. With swing trading, we are looking to lock in a smaller gain more quickly. You take smaller profits, cut losses quicker, and hold stocks for less time. Rather than targeting a 20 to 25% profit as you would for a position trade, a more modest 5 to 10% is what we're targeting with a swing trade. But this can change depending on the overall market conditions. In tougher markets, there are times when taking the first profit of just 2.5% is best. You can also tell from a stock's past trading history what it's likely to do going forward. If a stock's average true range is 20 points, then a good goal for swing trading profit may be to grab 15 of those points. Smaller profit goals also mean cutting losses quicker. Rather than an 8% loss cutting rule, we'll want to be cutting our losses at around less than 2 to 3%. This will keep you at a 3-to-1 profit to loss ratio, an important portfolio management rule. Whether you're swing trading or position trading, an outsized loss can quickly wipe out much of the progress that you made with smaller gains. Finally, the swing trader's focus isn't on gains developing over weeks or months, like you would with a position trade. The average length of a trade is more like 5 to 10 days. Now, whether you're swing trading or position trading, you'll often be using the same patterns to look for opportunities. This includes looking for proper bases and proper entries. However, with swing trades, we want to focus more on early entries, such as buying off of pullbacks and reversals. If you're finding that in a certain market environment, breakouts just don't seem to be working, then it can be smart to focus on buying stocks as they reverse off of moving averages for early entries. There are also times with swing trading where we're getting into a stock early, which helps turn it into a position trade. The key with swing trading is selling into strength and not waiting to be on the defense to start selling. This doesn't mean you have to sell everything in one go. Oftentimes, it can be a good idea to sell in thirds. We'll sell our first third once we're up a little. Then, once we've built a profit cushion, we can decide how do we want to handle the rest of our position. If the stock continues to rise, then maybe we'll use some of the shorter term moving averages as sell signals, saying if it cuts below one of those, then we'll trim our position. But getting that first third booked as a profit will definitely give us a lot more flexibility later on should the trade head south.